Hello, everyone. Thank you so much for your patience. We were just giving some time for people to join in. We have people, over 600 people registered to this webinar from all over the world. So we just wanted to make sure that we got a good amount of people before we start. As you know, for the next hour, we'll be covering exit options that are currently available on stake, just in time for our third exit window, which as of midnight last night is open for the next 14 days. We know you have questions about how our exit strategies work and what's in it for you as an investor. So we'll be sure to answer as many questions as possible in our Q&A portion of the session. To ask us anything, please, like I mentioned in the chat, use the Q&A button on your Zoom bar at the bottom or at the top of your screen. So let's get started. I realize I haven't introduced myself just yet. My name is Haya. I've been with Stake for the last 2 years in product marketing. And I'm joined by our wonderful co-founder and chief product and tech officer, Ricardo Brazido, all the way from Portugal. On to you, Ricardo.
Thanks, Haya. Thanks. Very, very glad to be here to talk about the exit window and our product developments. Yeah, my name is Ricardo. I look after product and tech here. I am a co-founder, and you'll get to have really good insights from our teams on this session. Great. So let's start talking a bit about real estate and why do we exist, why does Stake exist. We got originated alongside my co-founders Rami and Manar because we are really passionate about this asset class. It's an asset class that we can very easily, anyone can relate to that asset class. But the asset class in itself has huge problems in terms of one, getting the access is very restricted, as you know. Getting a piece of real estate is very difficult. It requires a huge amount of capital. The buying process of getting into real estate is complicated, clunky. Typically, whoever can afford real estate concentrates their assets into a single asset or 2 assets. And that's a risky strategy because you're accumulating too many funds, too many of your investment into a single asset. And then transparency is a problem because when you look at the market, there's so many players, there's so many things that you need to navigate. Cutting through that jungle is complicated, and we are here to help. If you think about the other asset classes like stocks, bonds, typically you see accessibility for those asset classes where real estate typically has not come to the forefront of our minds. We typically don't have an app to invest in real estate, and this is where we come in. There is already REITs, but they are highly correlated with the behavior of the stock market. And where we come in is talking about a very uncorrelated direct to asset exposure. And then our favorite topic, which is liquidity. How can we actually get liquidity out of this asset class? It's a heavy asset class, as you know. And we are going to be talking about that on this session. If you go to the next slide, please. Great. So with Stake, you can actually, our mission is to empower everyone to own and build wealth through real estate. You can do that very easily from anywhere in the world. You can buy a stake in a property from 500 dirhams, which is around $130. You can do that very quickly through our digital experience via an app. You can diversify across multiple assets in a single investment decision. And we are trying to be as transparent as we can by showing you property valuations, projections, or the inside virtual tools about the property, our inside scoop, how the financials work. So it's a very transparent experience, and like I said, when investing at Stake, you get a direct piece of the asset, so uncorrelated with, for example, the stock market and other instruments. Later down the road, you can sell Stake. Haya is going to talk about how you can do that. What are the mechanics through Stake? You can do that. But yeah, that's where we come in, and this is the value that we are adding as a company. We've been leading we have this leading position we are the leading platform of real estate investment in the MENA region. We were born about 3 years ago. We've been growing ever since. We literally are beating records every single quarter, and we are trusted by over 500,000 users coming from 170 countries with over 200 nationalities. We have been featured in Forbes, Time, TechCrunch, Gulf Business. We proud ourselves by being customer centric. We have a 4.7. Also other App Store reviews. And up to date, we transacted an astonishing 330 million dirhams, which is about 90 million US dollars. And we distribute rent on a monthly basis, accumulating to an amount of 30 million dirhams distributed to date. Great. And just to wrap up and to give you an insight over how we actually performed over the last year, we got across our portfolio, our investors experienced a 5.37 net yield with an average annual return of 10%. We saw average valuation increase of 5%, and we typically took 13 days to fund the property in our platform. In 2024, we have ambitious plans. We can talk more about that possibly in a future webinar, but we really want to grow the assets we have in the portfolio to add 250 properties over the course of the year. This would mean that we would have an active portfolio of over 400 properties, and we actively want to do full exits of probably around 25 to 30 of those properties, getting users and investors to realize their capital appreciation that have accumulated so far. I think at this point, I'll hand over to Haya, which is going to talk about exit options.
Thank you, Ricardo. So as Ricardo already mentioned, our mission as a business is to empower everyone to own and to build their wealth through real estate. And how we deliver on that mission goes beyond sourcing high quality properties and providing best-in-class service. For us, the 4 key pillars that really drive how we shape the investment experience on Stake are, number 1, our digital-first mindset. With Stake, there's no paperwork involved in securing your investment. You can download our app on your phone or use our web experience to create an account, and you can become an investor in just a few minutes. Second is accessibility. You can access prime properties worth millions of dollars and from as low as 500 dirhams or $136 to start. The third is just how borderless our experience really is. Anyone from anywhere in the world, and I can't stress this enough, can invest in the most lucrative residential market in the world by purchasing shares in high-yielding real estate in Dubai through Stake. And finally, which is the point that we're all here to discuss today, liquidity. To feel empowered, in my opinion at least, is to not only know what you're getting yourself into, but which is obviously made possible through a transparent investment experience, but it's also about being made aware of the options that are available to you to tap into liquidity when you need it most. The problem today, as we see it, boils down to 3 key areas of friction related to speed of sale, cost of the sale, and pricing. So let's break it down. If you've ever tried to sell stocks on a trading app, you know it's pretty much instantaneous. It can take a couple of days for your money to reflect in your bank account, that's for sure. But selling real estate, on the other hand, can take months to fulfill. To get the right price, maybe even source a broker, find the buyer, sort through the legalities and the paperwork. The range of time may vary depending on market conditions and property type. Transaction costs is another problem. It's a challenge in itself because selling can incur considerable fees, which can obviously eat into your profits. And the third problem that we've seen are related to pricing, where some properties may be valued inaccurately and sold below market value. Even during periods of uncertainty, there's a chance that there are fewer buyers in the market that are actually interested in buying properties because taking out loans and borrowing money becomes potentially more expensive. So these issues, plus the feedback we've collected over the years from our own community, helped us to identify the main pain points that our product can solve to design a better and more flexible exit experience. Let me walk you through the 2 exit strategies that we offer. The first is full exits, which enables investors to realize their investment's appreciation at maturity, which can be at 24 months, at 3 years, or 5 years. In the event that a property's value increases significantly, over 30% return on investment, Stake will immediately initiate a voting process amongst all the investors in that property on whether or not they wish to sell. If the majority opt to sell, then we will initiate the sale process. I'm very proud to announce that to date, we've completed 4 full exits, and we expect our track record to grow like Ricardo mentioned, a total of 25 properties by the end of the year. Our fastest exit to date was actually the one that we announced just a few weeks ago in Dubai Marina in Studio One, which sold 24 months after it was acquired and recorded a 40% appreciation. This shows that investing in property is not just about the immediate returns that you're going to make from the rental income you get in your wallet every month. The real game changer, and as I like to call it, the bread and butter of real estate investing and building wealth, is the long-term value increase of the property itself. This is why I must reiterate here. Adopting a strategic, long-term approach to investing is key to give time for your assets to mature and yield optimal returns. And at Stake, we typically advocate for a holding period of about 5 years to maximize the full potential of your investment. But in some cases, like we've seen with Studio One just recently, the period may look different for different properties. Maturity could be realized well before the 5-year term. However, we understand this might not work for everyone. So this is where our exit window comes into the picture. This option was introduced only 1 year ago exactly, in May 2023, and we've come a long way since then. Essentially, we open our exit window twice a year for 2 weeks at a time, so that investors on Stake that wish to sell their shares can do so for other investors to buy them. It's a secondary marketplace. Ricardo will give you the full breakdown on what it will take for you to be eligible as a buyer and seller in just a few minutes. But in the meantime, I'm going to wrap up this section now by telling you how we select properties for the exit window. Properties become eligible for sale on the window after a 1-year lock-in period from when they're initially acquired. We hold ourselves as Stake more and more accountable each window and each time to make the market as liquid as possible. So in this round, over 70 previously funded properties are eligible. Our last window had 50 and our first had 30, which is very exciting. Before we move on, I actually wanted to take this chance to see if we got any questions that we wanted to answer that we think the next few sections might not answer just yet. So I don't know, Ricardo, if you want to answer any specific question in the Q&A.
Yeah, thanks, Aya. Yeah, I definitely can. I'm just reading the questions out and see which ones we can answer very easily. I think one that comes to mind and related with what we are talking is about the experience of the app. I think one user here, Mohammed, is saying that the app is quite better, but still hangs a lot while loading properties. We did experience a high volume actually on the last 12 hours because the exit window just opened. Actually, I've been working with the team to optimize the app and to load much faster. You should not have any problems now. We still have a pending issue at the moment whereby Apple Pay is failing for some users, but we actually detected the issue and we are rolling out a fix. So please keep an eye out on the App Store and a new version will come out very soon. So that's one. Maybe a bit more technical, but the other one is related with the death of an investor. We do have procedures in this case. We're gonna have a nomination through the app coming out, so you can actually nominate someone, a next of kin, and someone that you can delegate your Stake account. So in case of death, that person can then claim the necessary. But today there is already a procedure you can do by contacting us at contact@getstake.com, and our customer experience team will get back to you with basically a offline procedure, but hopefully soon we can get that through the app and you can do that digitally. So let's remember that your investments are safeguarded, they are segregated in a separate SPV registered in the DIFC in Dubai, And you do have, every single investor has a title deed in their name. So in the God forbid, in one of those situations, that will not be a problem at all in terms of securing your investment. Okay.
There is one question actually I wanted to answer, Ricardo, before we jump to the next section. Abdulrazak is asking why the window is only 2 weeks. I think that's actually a very good question. And we usually also hear a lot from our investors, why do we only have 2 exit windows per year? It's worth noting that these exit windows are very operationally demanding. It's not just stake that's involved. There are a lot of stakeholders and a lot of parties that are involved in this, in making sure that this exit process is as smooth as possible for buyers and sellers. The Dubai Land Department is involved, the DIFC, the Dubai International Financial Center basically is also involved. So it means right now, it's not really possible to do more than twice a year at this stage. However, this doesn't mean that we're not looking into it. On the contrary, it's something we're working very closely with all the authorities involved in the process to make sure that we streamline the process and make it easier for our investors and also on us as stake to be able to operate more than 2 exit windows a year and potentially even longer than just 2 weeks. So I hope that this is coming in the future. So stay tuned. Sorry, I have to share my screen again. Yeah.
Yeah, that's okay. Great. So great. So let's progress a bit further into the webinar. So let's talk a bit about what is the exit window and why does it exist. Like Haya mentioned, the exit window is here to provide flexibility and liquidity to stake investors, as opposite as not having options to exit. We do believe that as part of this asset class, liquidity is one of the key pillars that we need to bring to investors as a standard. So very early on in our journey, even when we were as a young company, we wanted to bring that flexibility to users. And that window is to be used in some situations that we can describe that and what's in it for sellers. Like Haya said, we do believe in the long-term longevity of the asset class, and in order to really build wealth, we do recommend that you hold the asset for a longer period of time versus, for example, flipping the asset in 1 year. That will not bring you the returns that we project, and that can be beneficial to you. In terms of timing, we do it in May, November. It's a 2-week period to buy and sell. It's a very dynamic market because at any point in time you can come in and see different opportunities, because it depends on the timing that people put assets to sell, and also depends on the amount of assets that get bought. So we do see users coming back every single day to check out what's available. And there's one aspect of it, which is, in contrary of the primary market, which is open to everyone, this exit window or secondary trading facility is all open to buyers and sellers that fulfill eligibility criteria. For a buyer, you need to have at least one funded investment to access the market. So as long as you have one funded investment, which means you have invested in a property that have reached 100%, you will be able to access that market. For a seller, you must have held your asset for over 1 year. So we have sellers that have held, let's say, a set of assets for over 1 year, and some other assets that have not done their first year anniversary. The sellers will be able to put up to sale the shares that have at least 1 year in their portfolio. And this is to protect also to protect and to actually project the idea that the asset is a long-term investment versus something that you can just realize benefits in a few months' time. Great. So if we recap maybe on our second window, which was done in November 2023, it definitely exceeded our expectations. We saw, like Haya mentioned, we had 50 eligible properties We had over 1,500 listings. We broke the record of transaction volume at 4.3 million transacted, with 4.3 thousand transactions also done, and we observed a seller liquidity, which means sellers that at least saw some liquidity of 53%, which, however, we want to, of course, increase the liquidity rate. We still think it's a very healthy percentage, given the fact that the seller always has a possibility to discount to make the sale more attractive to buyers. The average time to complete the sale was around 8 hours. And basically, it was really successful, and we saw basically numbers improve from the first window all around, given we developed the product further. I can give you on how is it going with less than 24 hours of launch, the third window, but I'll do that at the end of the webinar. Great. So let's recap also on what's in it for buyers and sellers, and what are the benefits for each side of the market. For a buyer, you have a very diverse set of properties to invest in. We, like Haya said, in this market we have over 70 properties. It's great. It's our biggest market ever. We see people also spotting for deals and discounts. If you are buying at a discount, you will immediately realize on paper some capital appreciation, as you can understand, because you are buying basically an asset that has a discount compared to the market value. This is very important, and this, when you do realize the full exit, you're going to see your returns catapult because of this discount. And also, you, with the different array of properties that you have access, you can then curate your strategy. You can pick properties that are on up and coming areas, or properties that you are more bullish about. You can filter today the properties based on a certain criteria, things like net yield, neighborhood. So we are giving you all the tools to navigate the different options available. If we now flick to the seller side, yeah, like I said, sellers, we don't believe for sellers this is a tool to use early on their journey, but we do believe that this is a tool that they can use on their journey if they need to. So one of the use cases we see is investors have an opportunity to realize some capital appreciation that already accumulated. The example will be, if I invested in property, for the sake of argument, 2 years ago, I see an appreciation value of around 20 to 25%. I want to realize that capital appreciation. I can sell my share to realize that capital appreciation at the moment, or of course I can decide to hold that asset for a bit longer and then realize it later. That's one use case that we see a lot. Another big use case is freedom, is ability to free up funds if he needs to, and we see also sellers doing that to do portfolio rebalancing, or maybe some personal situation that they need to free up funds and liquidate the asset. They can do that when you sell on the exit window. The funds go directly into your stake wallet, which we can then either reinvest in our platform again to rebalance your portfolio or withdraw. But again, we give you flexibility. Users can sell at the market value, and we do see users selling at market value and having liquidity. This is important to stress. But as you can imagine, the more you discount, the more likelihood of having liquidity you have, the more likelihood of selling. So what we see is, as people discount more, because, and by discounting does not mean having a negative ROI, means that you are making your sell proposition attractive to a buyer. I'm going to give an example again. Let's say you have seen an asset value 25% over the last 2 years. You might be willing to sacrifice some of that appreciation to realize an early exit. you might discount at 5%, and you're going to attract more buyers if you do that, still realizing a positive ROI, because the ROI is made up of your dividends that you receive to date, plus all the capital appreciation that you will realize. So there's a lot of use cases for buyers and sellers, but the most important is to promote liquidity within the market and give that flexibility to both parties. Go to the next slide. Great. Yeah, perfect. Hi, thank you. Sorry, apologies.
No worries. Awesome. So like I mentioned, with every iteration of our exit windows, we strive to make the experience better and just to evolve it in a way where we outdo ourselves every time. So from the last two, we've collected a lot of feedback from our users on what they'd like to see. And that is why I'm very excited to share with you the 3 main new features that you can look out for on this window. The first is all about visibility. So just as you would on the primary market, when you invest in a new property, you will get a full breakdown of what you can expect from this investment. That is why we've introduced a couple of new additions to the secondary listings page, so you can access the most important information you need all in one place. So as you can see on the screen, actually, on this slide, there's actually an example of the graph that displays the valuation history for this example property or this mock property. It includes the price at which the property was acquired and every valuation it's had since then. If you didn't know, just a fun fact that we evaluate our properties every 6 months. So all our properties undergo a valuation review biannually by a third-party independent valuator. So by displaying this graph, like shown here on the slide, you can rest assured that you're actually purchasing shares in previously funded properties at a fair price. We also will provide visibility on the current leasing strategy for that property, so you don't need to guess whether or not the property is a short or long-term rental. You will immediately be able to tell, and that way you can also kind of adapt it to your own strategy if you want to invest solely in short-term rentals or long-term rentals. So it's really up to you to choose, but at least you'll get that exposure to the leasing strategy for that property, and also how much rent the property typically generates on an annual basis. The second feature, which I think was probably the most requested that we got asked to add the last 2 times we ran this window. I'm very excited now to share that it's available. It's never been easier to find exactly what you're looking for in the exit window, because now you can use our filtering tool to go through all the listings based on parameters that you choose. So also, as you can see on the slide, you can basically filter based on area, the projected net yield, and you can sort by discount from high to low, low to high. This is more useful for you if you're a buyer, to be honest. You can even select to view listings related to properties that you've previously invested in. So let's say, I'll give you an example. You are an investor in a 2-bed in Dubai Marina, and you check your portfolio and you notice, oh, this property is actually doing quite well. It's overperforming. It's paying me my rental income on time. I'm very pleased with my investment. That's great. You want more of the property. You can increase your share, the number of shares you own in it through our exit window if the property is eligible. And instead of scrolling through listings trying to find shares in that property, you can basically use, again, our filtering tool and just select my properties instead of all properties. So you can just switch which view you're using. And finally, real-time alerts. So on the back of what I just talked about with filtering, we also understand that it's very important for our users to be notified in real time whenever there's a new listing available that matches their preferences. So we know our investors are always on the go, and you don't always have the time to check your emails or to check, to open up the exit window every few hours. So now you can set specific preferences according to specific parameters, very similar to what you saw with the filtering from the very start. And you get notified also on your email, but again on your phone, when there are shares matching your filters that are listed. So you can save time. You don't need to do all the searching anymore. So you can be one of the first to know when there's a new listing that's live, when it matches what you're looking for. And now I'm going to pass it back to Ricardo. He's going to demo for us how to use the exit window as a buyer and how to use it as a seller before we jump to the Q&A section. I'm going to stop sharing my screen, Ricardo, for you.
muted. Okay, great. Thanks, Haya. I'm going to share my screen. Let me know if you can see it, please.
Yes, I can.
Yeah, perfect. Okay, great. Basically, we would like to walk you through a quick demo. Just it's always good to connect with the products that we are presenting, and this part is what we're going to be doing now. I'm going to demonstrate the journey of a seller and then the journey of a buyer, and then we'll try to end the session with some Q&A, so we satisfy any questions that you might have. So I have a test app here. This is basically a replica of the live app that is on the app stores. And I'm gonna enter with a fake user just for this demo that we can then, oops, sorry. Okay, I know what I did wrong. Apologies. Okay. So in this user, I'm going to demonstrate how the seller sees the market. So as you can see, the exit window is open, very clearly laid out at the top. If you have assets at stake, you can actually access the market through your portfolio. You can go to the central tab, and you can see here at the top under this yellow dot that the market is open for sell. And when you access the market, you have two options. Of course, you can buy secondary listings, or you can sell your stakes. And in this case, I'm going to try to sell my stakes. And here is an explanation how it works. I think given we just talked about that, I'm going to skip this part. But you can see here that in this user has out of the stakes that he has two stakes that are eligible to be sold. And I'm going to select one of the stakes. And when I can see here the depth of the market. So for example, I can see at the bottom that I have 2,000 shares, 2,215 shares available to sell. That those are my holdings. And I can also buy more shares of these properties. So let's say I want to sell. This is an alert because it's again what we described. We do see exit window as a lever for you to have liquidity flexibility, but we don't see it as an end game for you to realize the whole benefit of the asset class. So if I was to continue, and I think I saw a question on Q&A, this is quite important. When you are trying to sell shares, you can actually simulate without actually having to, put the assets to sell. What would be your returns if you were to sell those shares? So, for example, in my case, I'm going to try to sell 1,000 shares. And I can see here that those 1,000 shares, if I was to sell, I would get an ROI of 14%, as you can see. And how does that break down? It's very important. We have a current share price, and that would be the share price that I'm selling at. In this occasion, I have not earned any cashback and promotions. I have received some rent from these 1,000 shares I have. That will be my sale value according to the share price. And then at the bottom, you can see your fees that we collect at exit and VAT. So if those 1,000 shares were sold, you actually see what will be your total payout. Okay. Now at the top, you can appeal to more buyers if you want to make your listing more attractive, and you can actually switch between 0, 5, 10, 15, and 20%. Depending what you're going to select, you're going to see that will of course discount the selling price in terms of share, and of course affect your total payout, but also affect your return. But in exchange, you might get a quicker sale, or you are more likely to get a sale. Okay, so this is going to be important to note. And I'm actually going back just to show you. I think I have a case here. I'm gonna see this one. So if I was to sell this one, and let's say 500 shares, you can see here that in this case, my return is also different. So for every single asset you have, your return will be different because it's depending on the current market conditions. This is important to note. Before every single exit window, we do perform independent valuations of all the assets that are listed on the market. And you can access those assets through the document section in the listing, okay? So, for example, I'm going to confirm this listing. I want to sell, and this is all you need to do. And this is presenting a timeline. What will happen if someone buys your shares? So up to the 20th of May, which is when we finish the exit window, your shares are listed to sale. They, of course, if they got bought in between, that will not be 20th of May, so that will be sooner. The share will take place maximum in July, and we can guarantee you that you will receive your the proceeds from selling these shares up to the 31st of July. Okay, of course, this is an estimation. We do have a lot of work to do after the exit window closes, but this is a quite accurate estimation that we can provide. Going back here, after listing, you can actually view how your listing is progressing, okay? So many buyers can buy these 500 shares. For example, Haya here could buy 200 of those shares, and you will see a percentage of shares that you are selling. This will be dynamic, and every time someone buys your shares, you get a confirmation email that those shares have been sold, and you can expect to receive those proceeds, okay? That's the point of view of the seller, okay? So every time you want to log back in and see how your listings are doing, you can go here. You can see there's a view listing section. You can go in and you can see that I have 500 shares listed, and at the moment 0% sold because of this is a demo. But as those shares got bought, that percentage will change. Okay. Great. I think this is the sell side. I'm going to be quite short on the sell side, but maybe long, I'm going to show you in more detail the buy side, which is also very interesting. So now I'm going to log in with another user. And we're going to do some, we're going to buy some shares. Okay. So we can see both sides working. So great. So here I am. So now this is a simulation of a buyer, of course. This is an active investor already in the platform. He already has a portfolio of 130,000 in value. The listings that you see here are the primary market listings. So this is properties that are getting into our portfolio for the first time. We always have an array of curated properties that we source, okay? But if you want to access the market, at the top, you can see view secondary listings. And here is an explanation that you can invest at a discount, and you can earn a higher earning potential if you actually pick the right shares. You can see all your list, all that is available here. This list here is always very dynamic because this is in real time. When someone lists a share, this property will feature here. Now, what's important here and what have we introduced? We have introduced, as you can see, listed, we have 67 different opportunities. The depth and the breadth of the market is here. So you can of course scroll through the opportunity that you find more suitable. I'm going to pick, for example, this one, Lakeside Residences. And at the top, you can see very clearly what is available to buy. You can see here that in this particular listing, we have shares at a 0% discount, which means that at market rate. And we also have shares at 5% discount. Across everything, we have 33,000 shares, okay? And these here are the projected yields and annual yearly investment return that we expect for this property. We know that the property was funded in 2022, okay? And we can, sorry, my phone went to sleep. And we can see here, very important, what is the current leasing strategy that this property has. So this property has a leasing strategy of long-term rental. We do have some properties that are in short-term rentals. Depending on that, the leasing strategy is there. So we are giving you the possibility to choose which properties do you want and which leasing strategy you want. You can see the annual rent that this property has. And very important here, you can see how the property valuation appreciation has evolved over time. So back since January 2022, all the way to April this year, this property has appreciated a total of 32%. Here at the bottom, you can see, as I mentioned, you have shares available at a 5% discount, and you have shares available at 0% discount. Of course, as a buyer, you want to be buying automatically at the highest discount possible, right? You want to buy at the highest discount available. So you can buy shares, and automatically we're going to select the 5% discount for you. And you can buy a number of shares. I'm going to buy, for the sake of argument, 200 shares. Or 2,000, doesn't matter. Because there's enough available. There's 8,000 shares available, so I can buy that. And you know what are the absolute numbers that you should be receiving as rent according to the projections we have today. And this can be done very quickly and very easily through the checkout process. This particular user is going to receive cashback because it's an elite user, and which is one of our tiers. I can select the payment method. You can select your wallet. You can select a debit card. You can select Apple Pay. I'm going to select Apple Pay. And I can pay with one of my Apple Pay cards here, okay? So that is all you need to do to buy assets in the secondary market. You can now see those assets in your portfolio. And if I click view portfolio, I should be able to see my assets that I just bought, and I can see that the share transfer is pending, okay? You can go into this asset and you're gonna get the investment value and the timeline. And as you know, the title deed and share certificate will be coming once we do the transfer, okay? So that's all you need to do to buy shares. I'm gonna go back to the listing just to highlight a few changes and improvements we have done on this iteration of the exit window. If I go back here, as you can see, selecting the right investment might be tough, but to make your life easier, we have now introduced two sets of features that are really important. From the previous window, we always had sorting, so you can definitely sort by the highest discount. If you're looking for a deal, you can actively sort by the highest discount, and I'm gonna get, for example, one bed in the Address Boulevard, which has a 10% discount at the moment, also stood in Burj Khalifa. But I can also filter. Filter is a feature that we have introduced, like Haya mentioned, in this iteration, and you can filter by a number of criterias, which is yearly investment return, projected net yield. So for example, I could filter by everything that has a projected net yield of more than 4%. And I could say I'm only interested in the IFC and downtown Dubai and Dubai Marina. That will be the primaries that I'm interested in. And I'm going to apply my selection. And this will automatically filter what's available to me, keeping the sorting that I already have previously selected. This is very important. It has been a very highly requested feature from our investors. just to highlight another feature that we have released, which has been highly in demand, which is the possibility to get alerted. You can do that with this bell icon here. When you press that bell icon, you can set the criteria to be alerted. So I'm going to set, I'm only interested in those areas again, but this time I'm only interested in actually everything above 5%. And I'm going to create a listing alert. And automatically, this is a real-time alert. So automatically, if you have enabled push notifications, you will receive a push notification in real time every time there's a listing that comes in. We do intend to improve this feature further because, as you can imagine, depending on your criteria, you might get a lot of alerts. But it is important because those alerts are time sensitive. You do have a short amount of time to come to the app and buy the opportunity that is available. We are thinking about ways to make this even more value added to you. But for the time being, you do have that flexibility of setting up an alert. You will receive an email, you will receive a push notification. At any point in time, you can edit your alert, change your criteria, or of course, remove the alert if that alert is not relevant to you anymore. Okay. I think that has been the highlights. Of course, I would love to look at now at the Q&A and answer any questions that anyone might have. And I know that we have about 10 minutes, so I think we'll wrap up the demo for now, but happy to share my screen again if needed.
Ricardo, before we jump into Q&A, do you just want to run through the numbers that we've recorded so far?
Yeah, of course. Yeah, amazing. Yes. So as we mentioned, we have actually been astonishing with the track record of the last 24 hours. Me and the team were up at midnight observing the transactions coming in, which is amazing. So as we said, we have over 70 eligible properties. You could see on my demo, there's 67 available. We have recorded a 2.2 million transaction records up to me and Haya starting this webinar in a single day, which has been amazing. We have over 2,000 transactions already for buyers and sellers. I think we crossed over the 300 sellers that sold some shares. And we observe a sell liquidity at this stage of 40%, which it's within the norm that we observed last time. And this sell liquidity tends to go above 50% as the market matures and goes over in time. But this has been an amazing track record for everyone, for buyers, for sellers, for us to observe. And this just proves that liquidity is a key pillar of investing in real estate, and we are here to support this pillar in our journey and your journey at stake. Great.
We actually have a lot of questions. So I saw, Ricardo, that you flagged some that you wanted to answer live. Do you want to start with those?
Yeah, of course. I picked some that are important to clarify and they're relevant to the liquidity part. Don't forget that our customer support is always available to answer any questions. We do answer every single query that comes in. So if for some reason we cannot answer anything here because we won't have the time, we'll try to answer. We can answer that through contact@getstake.com. Or through our chat bubble in the app, okay? You can find that in the help center. But I'll answer the first question from Danny, which is, how is your capital appreciation valid at any point in time? That's a great question. Because we are now doing exit windows every 6 months, so in May, November every year, for every single eligible property we have, which means that every property that is in our portfolio for over 1 year, we do independent valuation reports every 6 months, and we do show that in a very clear graph, which I showed on the demo. And you, as an investor, you can track how that property appreciates over time and how much has appreciated since we have onboarded the property at stake. So I hope that clarifies your question, Danny. Great. I think I'll answer another question, and that's from Tabish, and and the question is, how is the share value determined during exit windows? Can be shares sold at a premium? So let's break down this, actually 2 questions in one. So the share value is valued based on a formula that actually it's very, very well explained within the app, which is actually based on a depreciation of initial costs. When you invest at stake, what we do is we take on some fees from you because that's part of our business model. But most of your capital is, of course, to acquire the asset. As you acquire that asset, we do see that as you paid for the cost of having that asset for 5 years. Now imagine you are trying to sell that share at year 2. What we make happen is we transfer some of those costs that you initially incurred. We transfer those remaining costs to the buyer, okay? And that is baked into the share price. So the share price is a function of how the property has valued in time, right? But also it has a component of depreciation of costs over time. That is, verbally it's hard to explain, but we do have a help center article that explains this quite well with examples. So I do incentivize everyone to look at those examples, and also look at how we calculate the share price. That is well explained on the app. Now, can shares be sold at a premium? The answer is at the moment no, because we feel that we don't want to give too much leeway to speculation. So at the moment, we allow people to sell at market price, which is according to the latest valuation that we source in the market, independently from us, okay? There's companies independently from us that are evaluating the property. But as we said, the user can sell at a discount, promoting that share lot to be more attractive to buyers. Okay, so I hope that answers the question. And I hope if you have questions still about the share price, I would really like to incentivize everyone to ask us or actually read our help center, which has a very detailed answer.
There's actually
I'll take one more and then
Go ahead.
go on, Hi, please. I'll take one more and then I'll hand over to you.
Yeah, please.
In case we invest in more than one property, could we transfer the amount for one property to a better performing one? Yes, you 100% can sell a stake on one of the properties. When you receive those funds, you can then put those funds in any of the available properties. That cannot be done within the same market, as you can imagine, because you will receive the funds after the market closes. But after the exit window closes, but as soon as you receive those funds, you can relocate those funds to invest, for example, in a property in the primary market. Hiya, please.
Amazing. Thanks, Ricardo. There's one question from Saad. What's the main pros and cons of buying fresh off the stake listing or from the exit window? So basically, I'll just rephrase this so that we can use stake terminology or terminology that everyone can understand. Basically, this user is asking, what are the benefits and what are the cons of buying from stake directly from our properties list, our live listings versus obviously the exit window. So at least in my opinion, and what I've heard from the team and what I've heard from our own investors who have bought on the exit window, when you're buying properties in an exit window, you're really buying into previously funded properties. So if you're an investor, you joined recently, and you saw in our funded tab in our properties page that there were some properties that you wish you would have invested in when they were available, but you didn't get the chance. The exit window sort of provides this outlet for you to be able to do that. So you can buy shares into those previously funded properties, again, as long as the property is eligible, which means that if it's been on the platform for at least a year, then you could do that. And also as a buyer, like Ricardo mentioned, when we were going over the benefits, you're also technically buying at a discount. So you're buying at a fair price, of course, but you're also benefiting from that discount, which could range honestly from 0%. Some sellers do not list at a discount. It's really at their discretion. And it could go up to 20%. So you're getting a really good deal on a property that's already a really good deal. So it's like a double whammy. It's a double win if you think about it. So at least for me, those are the main pros. In terms of the cons, I can't really think of one. It's really about it's really up to you to decide what kind of property do you want to invest in, and if there are any listings on the exit window that are appealing to you. And honestly, like you're benefiting from the price and the cost of what you're buying into. So it might be a good idea if you see a property that you like, that you wish you invested in. I think that's what I can tell you. I hope I answered your question. If there's still anything unclear, let us know. Again, in the Q&A section, we get back to it. There's also another question that came up. Ricardo, maybe this one is more for you than me, but why is the exit window only available on the app and not on web?
Yeah, yeah, I saw that one. So we have made the tough decision. You know, we started as a website. Just to give you a bit of insight, we are still we still have users that use the website, but as we grow as a company, and as we believe what is the experience of investing digitally, a lot of our users use the app very actively and use the app as their first way to access stake. And inevitably, we had to prioritize to to put more effort in one channel versus the other. And at the moment, that strategy is we are developing still a lot the website, but we are mainly developing the app. And we had the tough decision to make only exit window available in the app, and this means that we can offer a really great product to you on the app versus, let's say, a 50% product in each one of the channels. We do think, just to give you an idea, 92% of our users use the app versus the website. So there's still 8% of the users that use it, and they're valuable to us, and we do believe we want to continue to support them for the time being. But as we mature, it's hard to answer if in the long run we probably gonna have both channels, but inevitably we have to invest in one more than the other. I hope this clarifies, and I hope you give it a go on the app, because it's still our best experience.
There's another question that came up. I don't think it's really related to exit window per se, but it's pretty interesting to answer. From Omega, how does the monthly payout work? If you invest $1,000, for example, what would be the monthly return? So Omega, if you still haven't invested on stake actually, and you head to your portfolio, you'll be able to play around with our new tool called the income calculator. So we tried to introduce this concept of empty states in the app, where instead of seeing a portfolio that's basically zero, you can kind of imagine now with some level of accuracy what you would be earning if you invested a certain amount of money. So I actually have the income calculator on my phone right now, and I plugged in $1,000, but this is based on if you were to deposit $1,000 every month by the 5th year, and you can kind of decide which parameters you want. You can choose the calculator. You could basically tweak the settings. So you want it to be 5-year, 10-year, 25-year horizon. It's really up to you. But for the sake of just simplicity, I'm choosing 5 years at a 6% net yield. So by year 5, you'd have made almost $82,000, and you'll be earning a monthly rental income of about $400. So again, these are, estimations. It's really all about like market performance. They're projections, so they're not really promises in any way, but I think it's really interesting for you to play around with that tool in your portfolio on your mobile app, and kind of visualize what your earnings could look like. So I'll leave that to you. And how the monthly payout works, we pay our dividends, we pay the rental income every month into your stake wallet. It's deposited there automatically at the end of the month, and you can withdraw it into your desired payment method.
Yeah. Hi, I would just like to answer one question. I think it's very important because it's about safeguarding investments. So I think someone was asking here, what if stake goes out of business? How do I ensure that my investments are safe? So in the unlikely event that stake goes out of business, your investments will be safe. Stake, first of all, is regulated by the Dubai Financial Service Authority. So we are a regulated entity. And by being a regulated entity, we need to adhere to client money provisions. This ensures that your client assets are kept separate from the business stake, the business operations. Your investments, all your investments, when realized, are held in holding companies called SPVs, special purpose vehicles. And those SPVs are within the Dubai International Financial Center, or the IFC. Those SPVs are yours, not ours, not stakes. And that creates a legal barrier between stake and your assets. So you do have a title deed that is issued by the Dubai Land Department, DLD, in your name, and you do have share certificates in your name. And those documents prove the ownership of your stake in that property. The SPVs are registered in a public portal that you can verify at any point in time, and they are completely segregated. When it comes to client money or client money that you hold in our wallet, on the stake wallet, again, that money is what we call client money, which is segregated from the corporate money we have to run the business, okay? So there is a very good explanation also in our help center about this. More questions maybe that can clarify, but this is very, very important. And maybe I'll just finish with, there's a lot of people asking about Saudi and Saudi Arabia. We do, for those that have been following us, we are working on our launch for the Saudi product. We are very excited by it. It's a few months away. We are actually fine-tuning our product at the moment, but we will have opportunities across UAE and Saudi very soon via your preferred app. So keep your eyes peeled. This will come up very soon, and we'll do proper communications and hopefully a webinar about it as well.
Yes, of course. Actually, the whole team's full hands on deck to make sure the launch meets everyone's expectations. We're very, very excited. I know we're over time, but we wanted to get through as many questions as possible. There's one question that kept coming up. I'm trying to find it actually. I think it was about if I sell and my shares don't get sold, what happens? So if for any reason your shares don't get sold, we typically encourage our investors, those who don't list at a discount, to consider listing at a discount, because that would speed up your sale. It's just the reality of things, and you can think about it from a buyer psychology and from buyer perspective. Obviously, they're going to lean more towards listings with a discount. So you can possibly, if it's something that you're willing to consider, we encourage you to. And if for any reason it doesn't work out, then you can try again. In our next exit window, there's always an opportunity to sell. And don't forget that we're actually in the background working really hard to make sure that we get good offers on our own properties when they reach a certain condition. Like I mentioned, 30% ROI. So we're also working, like our operations team, our assets team is working constantly to make sure that if there's any good offer that comes on any of our properties, then we will initiate a vote to the investors in that property to sell. So who knows, if you don't sell your shares in this exit window, then potentially down the line, the property that you're in will be sold. And there was one more that was really, really good one. I don't know, Ricardo, if you have one in the meantime.
No, just conscious with time as well, because
Yeah.
we're over time, but
Yeah.
let's try to answer as maybe one or two more and then wrap up.
This is probably a good one.
Also to
Yeah.
respect everyone's time.
Yeah. This is probably a good one because I can see there's a good amount of people still on the webinar, so I'm hoping that we're getting through your questions. Is there a minimum number of shares one must buy for the secondary listing? No.
A great one. You can buy one share.
Oh, cool.
It's not the 500 million does not apply. You can buy one share. That will be 1 dirham something, most likely. Yeah, so you can buy as many or as little as you want in this case.
Amazing. And I think this pretty much sums it up for us. If someone buys the shares at the exit window period, when will the first rental payment be paid? Will it be end of the month or later?
Yeah, it will be later because we forecast to take about 2 months or 1 month to transfer the shares and then 1 month to pay that month, let's say. So the likely scenario is this: you're gonna buy in the May exit window. We're gonna transfer the shares in June, and you're gonna get paid your July rent. That is a very likely scenario, unless something extenuant circumstances happen. You will get your rent in July.
Amazing. Thank you guys so much for joining. Sorry if we couldn't get to your questions. We wanted to make sure that you saw how the exit window looks and try to get a feel for it yourself. Our customer support chat is always available in the app. Our team is always available as well if you want to send us an email at contact@getstake.com at any time, and we'll be sure to answer your questions there. We got some really, really good questions. And like Ricardo said, for Saudi, it's coming very soon. So we saw a lot of questions on that. We're very excited. So yeah, thank you so much for tuning in and for staying this long. And thank you so much again. Thanks, Ricardo, for joining.
Thank you. Thanks, everyone. No, thanks, Hi. Thank you. Thanks, everyone, that attended. Thank you. Thanks
You
very
can
much.
watch the
Speak
recording
soon,
on
okay?
YouTube. Thank you.